Ladies and gentlemen, future homeowners and current procrastinators, let me begin with a fact that should make you put down the Starbucks coffee. The average home price in Canada as of today is no joke. It's not just a number on a screen, it's a reality that's drifting further out of reach for anyone who doesn't have a plan. But don't worry, I'm not here to scold you into feeling terrible. I'm here to save you time, money, and tears, and to get you one step closer to the keys to your first home. So buckle up, because if you don't start planning for your down payment now, the market will just eat you alive. Let's start with the one time of year when the government does you a favor if you know how to find your last year's notice of assessment from CRA. You know, that document you glance at and then promptly forget about every year. Hidden in that report is your Rrsp contribution limit, a golden nugget of opportunity you need to grab before March 1st. Why? Because contributions to your Rrsp can not only reduce your taxable income, but they can also turn into a turbocharged savings plan for your first home, even with the existing savings you already have. Now, let's talk about the Rrsp Homebuyer Plan. Here's how it works. You could contribute to your Rrsp, let that money grow tax-free, and then after 90 days, withdraw up to $60,000 per person or $120,000 per couple to buy your first home under the Rrsp Homebuyers Plan. It's like borrowing from your future self, except your future self won't charge you interest, just the government's approval to avoid taxes on that withdrawal. If you have existing savings of up to $60,000 and available contribution room as per your Rrsp deduction limit statement, you can trigger a tax refund on this amount equal to your marginal tax rate. If you can make the full $60,000 contribution and are in a 40% marginal tax rate, you can generate a tax refund of approximately $24,000. If you're sitting there thinking, great, Vince, but that still doesn't solve the problem of rising house prices, let me say this. It's not about solving the problem of rising prices. It's about solving your problem of not having enough of a down payment. Now let's get strategic. Your Rrsp is just the first tool in your savings arsenal. Enter the First Home Savings Account, the Fhsa. This is like a Swiss Army knife of savings. Contributions are tax deductible, growth is tax-free, and withdrawals for your first home are, wait for it, tax-free. The First Home Savings Account allows you a contribution limit of up to $8,000 per year to a maximum of $40,000 per individual. Combine that with the tax-free savings account and potential unused contribution room, which also grows tax-free and allows flexible withdrawals. Between these three accounts, Rrsp, First Home Savings Account, tax-free savings account, you've got the ultimate financial trilogy to accelerate your savings for that down payment down the road. Here's a reality check. The more you save now, the less you borrow later. And with interest rates doing their best impersonation of a roller coaster, borrowing less isn't just smart, it's survival. The bigger down payment means lower monthly payments, less interest over the life of your mortgage, and a better shot of locking in a competitive rate. But hey, if you want to be shackled to a massive debt load, paying more interest than principal for the first 5 years, then by all means, don't plan at all. Let the bank own more of your home than you do. See how that feels when you're over leveraged. At OwlMortgage.ca, we're not just about giving you a mortgage. We're about giving you a plan. And that plan starts now. Not in 6 months when you're panicking about missing the market. Not when rates start to move up. Now. We're here to simplify this for you because, let's face it, the financial system wasn't built for clarity, but it was built for opportunity. You just have to know how to use it. So here's what you're going to do. Number 1, find last year's notice of assessment. Number 2, calculate how much you can contribute to your Rrsp. And 3, start building your savings trilogy, Rrsp, First Home Savings Account, and the tax-free savings account. And if you're feeling overwhelmed, don't be. That's why we created OwlMortgage's YouTube channel. Hit like, share, and subscribe so you don't miss a single episode. Let's make 2025 the year you stop dreaming and start planning. let me leave you with this. The world isn't going to wait for you to figure this out. The housing market isn't hitting pause because you're too busy. If you don't prioritize your financial health now, someone else will, and they'll be the ones holding the keys to the house you wanted. So wake up, plan, save, subscribe, and let's make your first home a reality. Thanks for listening, and remember, the Wise Owl is here to look after your mortgage when the time comes. Cheers.